Hey, are you a real estate investor and you're pretty active and you're buying a lot of properties and all of your properties aren't active or rented and you're still writing off expenses for them? If that's you, you want to watch this video. Come on with me to the other side. Hey everybody, Kamar Ellis here, the Finance Rebel, founder of the Philly Tax Team. If you're new to this channel, you've never been here before, never watched me before, don't know me from a can of paint, I talk about all things wealth. Taxes, stock, investments, real estate. If it's about money, we talk about it. So welcome to the channel and come on in and get a coin. So today I was having a conversation with a client and my memory got jogged, right? Because there was something that I was telling this client that they do that they shouldn't do, or not that they do because they didn't do it, because I warned them about doing it and not to doing it. All right. And so if you're wondering what this thing is, right? By the way, this is for raw real estate investors. I see a lot of real estate investors making this very, very mistake. All right. So again, if you're a real estate investor, you're buying a lot of properties, you have rentals on the market. We're not talking about flippers. We're talking about straight buying whole people, rental folks, those types, long term. So listen, when you buy property and you don't make that property active, and what I mean by active is you're actively looking to have it rented, you cannot, I repeat, you cannot write off any expenses associated with that property. Why? That property is considered inventory property. It is not active property. It's not actively being rented. So here's the rule. If you're not actively looking to rent the property and have it active and be an active asset for you in your real estate portfolio, it's inventory, okay? And so you don't get to write off all your current year expenses, right? I know some people who do that. That's wrong. That's incorrect. You can get in a lot of trouble with the IRS if you do that. All right. So we want to avoid all trouble. We want to avoid all costs. We want to avoid all fines at all costs. All right. What are you to do? So this is where the knowledge of accounting comes into play. So any money that you spend on an inventory property becomes a part of cost basis. Cost basis. What in the world is cost basis? There's those funny little accounting terms again. So cost basis is basically the cost of the property that you bought, right? You have your purchase price. You might have done some major improvements. Trying to think. Let me give you an example. Let's say you bought a property and you had to get a whole new roof, not just the coating, but a whole new roof. That would be part of your cost basis. All right. So you would add that in. So for example, let's say you bought the house for $100,000, the property, and your roof cost $10,000. So you have $100,000. Now that $10,000 is now a part of your cost basis. Same thing goes for any of your rental expenses that are not actually rental expenses. They're inventory expenses for your property that is not actively being sought to be rented on the market. All right. So if you pay for water bill, electric bill, I don't know, real estate taxes, those things are not to be actively written off in the year in which you are filing taxes. Instead, they get added to the cost basis, like I said. And they are then accounted for at the time of the sale of the property. Or there's another caveat. Once the property becomes active, you can start depreciating the cost basis over the life of the property. Usually for residential real estate, it's about 27 and a half years. For commercial properties, I want to say it's 39 and a half years to depreciate. This is all straight line. All right. So again, if you're a real estate investor, you have any questions, you want to do a 15-minute consultation with me for some tax stuff that you don't understand, you need some clarity on, might need some help, hit the link below. All right. Again, I'm continuing on with my tax season checkup. This is one of the parts of the tax season checkup. I'm not even sure how many days we have left until April 15th, which is the tax deadline. All right. But I'm going to continue on because I made a promise to you. I'm going to show up every day and do a video informing you about taxes so we don't have any excuses. We can get them all done, out of the way, and not pay our least favorite uncle, Uncle Sam, any more extra money. All right. So here's a question. Question of the day. Are you a real estate investor? If you are, drop a comment in the chat. All right, everybody. Kamar Yellis out. I will see you next time. So long.